Hello everybody, welcome to Commodity Culture, where we break down the commodity space for both new and experienced investors. My name is Jesse Day. Before we get started, standard disclaimer, nothing here is investing advice. Do your own due diligence. And today's guest is the CEO of USGO Inc., a newly minted exploration and mine development company focused on unlocking the substantial value of the Whistler Gold Copper Project in Alaska, is Mr. Tim Smith. Thank you so much for coming on the show.
Jesse, thanks so much for having me on the show. Delighted to have the opportunity to be able to speak about the gold space and to raise awareness with your viewers about our new company, as you just mentioned, US GoldMining Inc., which we launched via an initial public offering just as recently as late April, and which now trades on the NASDAQ exchange under the stock ticker USGO.
Excellent. We'll definitely want to dive into US GoldMining Inc. But first, I want to start with the broader macro here. And it's been a very interesting year for gold and for the dollar. We've seen a clear move by BRICS countries, and there's more countries applying for membership, it seems, by the day. And they're wanting to undermine US dollar hegemony and challenge its reserve currency status. So how significant is this development? And is the US dollar actually at risk here, or is it more resilient than a lot of people are making it out to be?
Jesse, look, great questions. And yeah, really happy to be able to provide some thoughts. Of course, we are very close followers of the gold price and the various influences on that. Gold price is, of course, the underlying fundamental for our business, which is the gold exploration and development sector. And in short, yeah, we see a lot of factors at play which we believe could continue to support gold rising higher in the year and in the medium and longer term. So, and one of those is, of course, the US dollar. I thought perhaps I'd just start with setting the scene. I'm sure your viewers are aware where gold is at, but sitting around $2,000 per ounce, plus or minus $50 over about the last 2 months now, seems to be building a really strong base. So it's been a great time to launch a brand new gold copper exploration company focused on assets in the US. And 2023 has been good for the price of gold. We think it's just the start of bigger things to come. So maybe just to recap, we've seen gold increase by over $200 since the start of this year. And if we look back a little further to around late October, early November, when cryptocurrencies were starting to take a bit of a hit, that's really where this bull cycle started. We're up about $300 since then, or about 20% in the last 6 or 7 months. And of course, it peaked recently close to an all-time unadjusted high of just over $2,050 per ounce, and most importantly, as I mentioned, it seems to be stabilizing at around 2,000 since early April, which was when we started to see a lot of additional safe haven buying on the back of the regional bank crisis. So unlike some of the recent previous spikes that we've seen over the last couple of years, for example, when Russia invaded Ukraine, and before that, the commencement of the COVID pandemic, we saw some spikes, but gold came straight back down. However, this looks different. We appear to be building a new normal at around that $2,000 level. So that really sets up the gold price to potentially threaten higher ceilings as the year progresses. And, in terms of medium to longer term prospects for the gold market, I would double down and say that in my 27 years, I've never really seen a setup that looks like it could support a major bull market for gold in the way that we're seeing it now. You mentioned the dollar, and certainly, we think that what we're seeing and hearing is that more and more investors are moving away from it and other fiat currencies and looking to hedge against economic uncertainty. Globally, the US dollar does seem to be starting to lose some of its luster in the world economy compared to where it has been for the last 50 years or so. And of course, weakness in the US dollar typically supports strength in the gold price as people look to that longer term stable store of value to hedge their investments and savings against fluctuations in the economy. And many of those global economies that you mentioned, in particular the BRICS countries and the other countries that are looking to join, certainly widely reported to be moving away from their reliance on the US dollar as a kind of a default global reserve currency. And one of the ways they're doing that which has been very widely reported now, is the gold buying by those countries' reserve banks. The World Gold Council, for example, recently reported there has been an increase in demand for gold by various central banks and other institutions, and in fact that's been going on in a very strong way every quarter since at least the start of last year, 2022, and most recently in Q1 we saw a 228% increase quarter over quarter. So I guess the Q2 numbers will be coming out shortly, and I would expect that trend to continue. So what we're also hearing is that this is the highest amount of central bank gold buying since the 1950s. So this is really interesting. Not only is it indicating that those large developing economies, those BRICS nations and others, they are clearly have a strategy to build their own reserves, to move away somewhat from their reliance on the US dollar as a form of that global reserve currency. And clearly this is also driving up demand for gold and perhaps driving the US dollar down over the longer term. I certainly remember myself when I first started my career back in the mid-90s, the central banks were selling off gold reserves. That really hammered gold at that time, and in fact, many of my graduating class at that time left the industry, the gold exploration and mining industry, because of the impact that price decline had on the gold mining sector. So it's very exciting to be seeing the opposite of that now, with the buying by the central banks, and I guess that really started right after the global financial crisis, but clearly it's accelerating in a big way currently.
Absolutely. I do also want to get your thoughts on the debt ceiling debate, because we're kind of in the thick of it. It seems to be reaching a resolution as the bill was initially passed and now must pass a vote before it can be signed into law. So notably, the new limit is a time limit as opposed to a dollar amount, which kind of doesn't put a cap on the spending until that time limit is reached. I believe it's in 2025. So what does this massive amount of additional debt being allowed in the system mean for sound money like gold?
Yeah, it's been a fascinating to watch this. I think we're all happy that it does seem to be passing. It certainly passed through the House and is now going through the Senate and should be signed by deadline. So, I think although we're seeing some sort of partisan brinkmanship, which has been inserting some nerves, back into the market, but by and large, I think the market's been pricing the possibility of the default already, and now looks to be in recovery with the news that the deal has been done. But back to your question, whether it's this event or the next time this comes up in early 2025, let's start with the generalization. Uncertainty will drive safe haven gold buying. It always has, always will, and as we saw with the recent regional banking crisis, safe haven buying of bullion spikes during times of economic turmoil. And there's plenty of recent economic data, lots of recent reports pointing to increased recession fears with the debt ceiling having been in play, and we're really just sort of kicking the can down the road here at the moment. So in terms of that broader story, in terms of the need to get the debt under control, but with somewhat of a shocking reality that one of the most obvious options to do that, i.e. settling the debt, doesn't seem to be achievable or even on the table, then, as I say, we really are just kicking the can down the road, and there will have to be a reckoning. So, just the uncertainty around that will continue to support safe haven buying of gold as a hedge against, this uncertainty and these other perturbations that we see looming in the broader economy. If at some point in the future the US does default on that debt, then, obviously major repercussions, and we would expect gold to really break out at that point.
Yeah, definitely. And I do also want to get your thoughts on inflation here. I've talked to several guests who believe this is a structural and persistent problem. Will we ever see 2% inflation again? And once again, how does an inflationary environment affect the gold price?
Well, look, there has been, shall we say, some leveling out in inflation data. We've heard that inflation is slowing down over the past couple of quarters, but I think our shared experience, we're all consumers, is we continue to see inflation out of control. We all know how expensive stuff is. We all need to put gas in our cars and buy groceries for our families. Will we see it at 2% again? Well, I don't think anybody would be game enough to call that happening in the next year. I think it's going to take years to get back to those levels. And, in terms of what that means for gold price, with high inflation and uncertainty that it's going to get any better anytime soon, and that clearly involves speculation that reserve banks will continue to increase interest rates to get inflation under control. So all of these things are impacting the strength of the dollar, supporting that movement towards gold as a hedge against uncertainty, and weakening of the value and buying power of the dollar, and therefore that demand for gold is supporting a higher price.
I'd like to hear what you think about this recent tweet made by In Gold We Trust, which releases a fantastic report every year, by the way, on the macro of gold. But here's the tweet. Money supply growth in the U.S. calculated on a monthly basis is negative for the first time since the 1950s, and on an annual basis for the first time since the Great Depression. The soft landing much invoked by the Federal Reserve seems to become less likely by the day. So what are your thoughts on that and, this myth of a soft landing? It seems like there's very few analysts out there who are calling for a soft landing. There's a few. Could this end gently, or do you think we're headed for a recession and a potential crash in the broader stock market?
Yeah, interesting question. So, at the end of the day, money supply is obviously one of the levers that the Fed can pull to control interest rates. And while the Fed has been communicating that they intend to increase interest rates in the near term, or at least consider that, the reality is that they don't have the capacity to do that forever. There's already a significant amount of debt strapped onto the economy at the household, corporate, industrial, and government levels. So, as a result, we would expect central banks to look to revert to a lower interest rate environment as economies recover. And we have been seeing some data around that, which is encouraging. But I think overall it's going to be a slow process and subject to significant ongoing turmoil along the way. So, I would agree that I think we'll see more of a bumpy ride than perhaps a soft landing.
Great. Well, I want to finally ask you, before we do jump into US GoldMining Inc., aside from everything we've discussed, are there any other tailwinds you currently see working in gold's favor?
Well, I think we've sort of touched indirectly on geopolitical tension. We continue to see that around the world. That is always a trigger for safe haven buying. People flock to commodities that retain a store of value during those moments in time. And I'm talking about Russia, Ukraine, China, Taiwan, but there are other political situations in play. The situations in places like Iran, Pakistan, and even some of the South American countries with recent elections. And, I'm talking about Brazil and Peru and Chile, for example. But another thing I'd like to touch on, because it's something that we follow very closely in the exploration, mine development, and mine production space, is that longer term, we think that another factor that is really going to impact the global the gold price is the global supply of gold from mine production. And we think that could be challenged by what we see as being reported, which are diminishing resources and reserves of gold in the ground. While gold production has been up in recent years as the producers have increased their production with generally rising gold prices over the last few years, we wonder how long that is going to be sustainable without new discoveries and mines coming on stream. And so maybe just to expand on that a little bit, what we're seeing across the largest gold mining companies is that they are not replacing their reserves in the ground, and in fact they're just continuing to deplete those reserves as they mine their way through. I just spent the last 6 years, actually, before I came to work with US GoldMining Inc. I worked for a couple of majors. First of all, Goldcorp, and then Goldcorp was acquired by Newmont, so I joined Newmont for 3 years. Fantastic experience working with the world's biggest gold miner. But I know from first-hand experience that the discoveries are not being made. They're struggling to replace their 6 to 7 million ounces of gold production. annually. So the only way Newmont can really continue to sustain its gold production as it looks out into the future sort of 10 to 15 year forecast range is to do that from acquisitions. And I know this directly because I was the head of generative gold exploration for Newmont North America, and I can tell you they really aren't exploring at the pace that they need to try to make those organic discoveries. So instead, we see them acquiring ounces. And there's a history, Goldcorp, which I just mentioned in 2019, and now we're seeing the massive ongoing merger with Newcrest, which is a $19 billion deal currently being closed between Newmont and Newcrest now. And just diving a little bit deeper into that subject, when we look at the past 10 years and the resources and the reserves in the ground that have been reported by the senior gold producers, it's reduced by almost 50%. So clearly, the gold production levels we're seeing right now are just simply not sustainable. They are not replacing, as I've said, the mined ounces via exploration. Therefore, they need to sustain production via acquisition, and that acquisition is going to have to come from an increasingly smaller and smaller supply of large, high-quality deposits in safe jurisdictions, just like our asset, Whistler. And we think Whistler is an asset that the big gold mining companies will want to own as part of their project portfolio.
Well, that's a great time to segue into US gold mining. As you mentioned at the top of the show, ticker symbol USGO on the NASDAQ. So for those who aren't familiar with the company, let's just start with kind of the 10,000-foot overview.
Yeah, of course. So, perhaps some of the fundamentals. I just mentioned Whistler. So Whistler is a gold copper project located in Alaska. It was purchased by a company called GoldMining Inc., our parent company, if you like, a founding company in 2015. And last year, we vended that asset into a subsidiary, which we just recently took public via the initial public offering. And I mentioned that was just as recently as right at the end of April. So great timing, to time that IPO with this bull gold market. And as you mentioned, we're on the NASDAQ now, trading under the ticker USGO. So the Whistler Gold Copper Project is located about 100 miles northwest of Anchorage, which is in the south of Alaska. Whistler is a unique opportunity in the gold mining and exploration space. It's a rare example of a very large deposit in a great location with some really great geologic attributes that we see as being something we're going to be able to increase the valuation on that asset. It is a previously unmined deposit, so it's not a remnant mining story or a historic mine. It is a pristine virgin gold discovery made about 20 years ago that we're just basically bringing back online now with the creation of US Gold Mining and the financing of that company. In terms of size, it totals around about 9.4 million gold equivalent ounces. So, this is great in terms of putting on the radar of those senior gold producers that I mentioned earlier. I'll just break that 9.4 million ounces down for your listeners. So that includes around 3 million gold equivalent ounces in the indicated category, which is the highest confidence category, and another 6.4 million gold equivalent ounces classified as inferred. You'll note that I mentioned gold equivalent ounces. That includes about 70% gold, and the remainder is largely copper, about 29% copper by value, and a little bit of silver in there. So the copper component itself is about 1.1 billion pounds of copper, and we've got about 24 million ounces total silver. So great diversity across those three commodities, exposure to upward pressure in all commodities, and in particular, I think for anyone interested in investing in the critical metal space, and certainly in Alaska, copper continues to be thought of as a critical mineral because of its importance, obviously, with the greening of the economy and the demand for copper to satisfy the growing electric vehicle growth industry. And just to summarize that, assets of this scale in mining amenable locations and friendly jurisdictions like Alaska are increasingly scarce, and so we believe that Whistler is something that will be coveted by the major players in our sector, being those senior gold producers I mentioned earlier. So our thesis, our business model, is that because the precious and critical mineral sector industry is struggling to replace its production depletion via new discoveries, and further that assets of the size and quality of Whistler are becoming scarcer, then we think there's a very good opportunity to position Whistler and US Gold for a potential merger, acquisition, or partnership with one of those majors. So great size, great location, great exploration upside, and a great opportunity in the current market to realize exceptional growth and value in the future for Whistler and US Gold Mining.
Okay, so when we look at your market cap of just over 100 million, I believe you have nearly 20 million in the bank, and the market value of your 9.4 million ounces of gold resource equivalent, the market values it at around $10 an ounce, which seems quite low compared with the global median of around $40 an ounce. So talk to us about this valuation and the opportunity it presents for investors.
Delighted to. So that valuation was actually when we launched our initial public offering, that $10 per ounce, and we thought that provided great value, and certainly there was a very enthusiastic response to that IPO. Since we've launched over the last 6 weeks, we've seen really encouraging growth in the market cap. The market has really cottoned on to the fact that there is a big delta between that initial $10 per ounce valuation and what we see as being the average of around $40 to $50 per ounce across the industry for equivalent deposits at similar scale and advancement in terms of the stage of development. So at $10, from $10 to $40 to $50 per ounce, big delta. We've seen really encouraging growth already in the past couple of weeks, with our market cap up now to around $180 million, which is valuing those ounces in the ground at about somewhere sort of $16 to $17 per ounce. So really encouraging recent response from the market, but plenty of room, still a big delta between that $16 to $17 per ounce and that median market average of $40 to $50 per ounce for assets that are at that developing stage. And that's where we will be taking Whistler over the coming months and years as we advance our exploration and other studies to present a preliminary economic assessment on Whistler to the market. Now, beyond that, as we will continue to advance Whistler into feasibility study stages, when we look at the median valuation across the industry for ounces in the ground at the feasibility study stage, we see valuations closer to $100 per ounce. So a significantly higher multiple as we continue to advance and develop the Whistler mining opportunity. And an example of that from my past, so I was in a previous role VP exploration for a junior explorer called Kaminak Resources that was listed on the TSX. We made a big discovery called the Coffee Gold Project in Yukon, Canada in 2010. Over the next few years, we developed a preliminary economic assessment and ultimately a feasibility study in 2016. And at that point, Kaminak Resources was acquired for around Canadian $520 million. So essentially, a valuation delta from about a 30 million market cap when I joined that, and when we made that discovery, through to a 520 million market cap at takeout, which equated to around a $130 per ounce valuation for the ounces in the ground at that time. So management at US Gold, myself and my colleagues, we have experience doing this. We've done it before. We have the track record. And, we see numerous additional examples over the past several years where larger companies have paid well in advance for $100 per ounce and higher for quality ounces in quality jurisdictions. And that's how we see Whistler. And so, that is why we think our IPO was so successful at $10 per ounce. It was a very attractive offering. It's why we've seen recent growth up to $16 to $17 per ounce, and why we think there is very significant room for continued growth. When we look at this asset, an asset in Alaska with all the infrastructure that the state is willing to support, to develop it. It's a quality asset, and obviously we're positioned in a rising commodity cycle. So yeah, we think just tremendous upside here.
And do you have a timeline for when that preliminary economic assessment will be available?
Sure, yeah. So we're just starting our exploration work now. We just announced some news actually recently, earlier this week, that we've taken the field. We've started to put teams into the field to open up the camp, and that will support mobilization of a drill to restart drilling at Whistler for the first time actually since 2011. That will restart this summer. That drilling, so this is essentially an exploration, mine engineering, and environmental baseline program that will be completed over the course of this summer. Results will come in over the winter, and we will build out our models and start to develop that preliminary economic assessment around this time next year. Certainly we will continue to keep exploring in addition to wrapping that preliminary economic assessment, which is just a fancy word really for a mine scoping study around the Whistler deposit. We see tremendous exploration upside. We're in a district here where we see a lot of additional geologic targets and geophysical targets that could deliver on brand new discoveries. So we're very excited about advancing that growth prospect as well.
Great. Well, thank you so much, Tim, for joining us. Before I do let you go, do you have any final thoughts on the company? Anything else you think should be on investors' radars about U.S. gold mining?
Sure. Yeah, look, maybe just a couple of quick things. I've mentioned that we're in Alaska. I want to just give Alaska a plug as a great place to invest in the resource sector. I think sometimes people think of Alaska for, if you're in the lower 48 as being all about glaciers and polar bears. But, Whistler is the closest large resource development opportunity to the main economic capital of Anchorage. Anchorage is the largest population center in the state. It's a major transportation hub between North America and Asia. And so with Whistler just being 105 miles away across a valley in really easily accessible terrain, which is amenable to future mine development, we don't see any impediments at all. In fact, we're on state land, which is a great position to be in. And furthermore, the Alaskan state government, led by Governor Dunleavy, is a very strong supporter of the resource sector. Alaska's economy is really based around resources, whether it's oil and gas, forestry, fisheries, or the hard rock mining sector, such as gold and copper and other metals. So very strong support at the community, regulator, and obviously the state political level. And one of the key catalysts and a potential game changer for US gold mining in the near term is that the state government has set up a Roads to Resources program, something that has been launched by Governor Dunleavy's administration. That road will be built by the state from essentially Anchorage directly to our property. So, this will be a significant game changer in terms of capital cost when we come to input that into our economic model that will underpin our preliminary economic assessment. And that road will connect Whistler with a port that has already been constructed, but which is underutilized and is really just waiting to receive gold copper concentrate from Whistler Mine in the coming years. And I think most excitingly, this isn't just talk. The state is putting cash into this. So far, they've put $8.5 million into design, road design, environmental baseline, and also stakeholder consultation. And they recently announced that they hope to commence, this is the state I'm talking about, hope to commence construction of that road as early as 2025. So some really exciting developments there, and again, just pointing to what a great place Alaska is to be exploring and to be the owner of a flagship, large, high-quality gold asset such as Whistler.
Well, that's all very exciting stuff, Tim. We really appreciate you coming on the show, sharing your knowledge about gold as well as US GoldMining Inc., and look forward to keeping up to date with the company. And thank you so much once again.
Thank you so much for your time today.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.